Welcome to the Weekly Trend Trader, how to do trend following. As always, what we're going to do, we're going to take a look at the Asian markets, the European markets, and the markets in the USA. But what we're going to look at particularly is with key events going on this week and the next couple of weeks, have we created the perfect storm? Don't forget, if you haven't already, to subscribe, to like, and to share this particular video with your friends, because you may have those who want to create a part-time income, or those who would like to become a professional trader. Well, I've been trading for over 20 years, and I'm sharing with you exactly how to do that via the strategies I'm going to share with you. Also, don't forget that notifications bell, because it's only by turning on that notifications bell that YouTube can alert you to the fact that we've released the latest video, and the information I'm sharing with you is time critical information. So go ahead and hit that bell. Right, so let's take a look at the Asian region, and let's start our look by looking at the Hang Seng. Well, as we look at the Hang Seng, what do we see here? Firstly, we've got this falling 52-week moving average that has been falling for the entire 2-year period of this chart. But what's happened since the summer? Well, we had this situation where the market ran up and it tested the falling 52-week moving average twice. So we ran up there in July. We did a very big move, a big push for the upside. We failed at 27,000 and we had price rejection. What was the result in that? We got a high test in pin bar, and then for the next 4 weeks the market closed down. Then again at the end of August, we've got that falling 52-week moving average still. We went all the way up. We touched a high of 25,700, and what happened? We experienced price rejection. And for the next 3 weeks, what happened? We had seller bars, week after week of the market selling. Where are we now? Well, in the last 3 weeks, the market has tried, the Hang Seng, to make some sort of recovery. And we've moved from 23,500, next week 24,000, and then this last week we high tested 24,700. Fantastic move up. However, situation still below that falling 52-week moving average, failing to close above that falling 52-week moving average. Look at the RSI, still got that bearish bias, still below the 50 on the RSI. So this market still cannot break to the upside. Let's look at China. So here's the Chinese market, Shanghai Composite. What's happened since the summer? Well, in July, the market ran up, broke out of that trading range that we can see there. Look at the 52-week moving average, flat through the market, particularly in 2019. This year, market since the summer has tried to move to the upside. We broke out of that trading range and we ran up to 34.50. Tested that beginning of June, had price rejection, market fell back to 3,200. Then again in August, we ran up to 34.50, tested that high again. What happened? Price rejection, and the market fell back during September all the way down to 3,200. But what's going on now? Well, in the last 2 weeks, the Chinese Shanghai Composite is trying to make a move to the upside. Look at the rising 52-week moving average. This market is trying to move to the upside. We've got a rising 52-week moving average. We closed last week at 33.50. Also, take a look at the RSI. The RSI has managed to stay from the summer above the 50. That's bullish bias. Also, when we look at September, we've got a slight rounding bottom. A rounding bottom pattern. It's a reversal pattern. It's bullish, and it shows that this market is trying to move to the upside. So very, very interesting to see what happens on China in the next few weeks. But at the moment, this is saying the market is trying to move to the upside. We've got a line cross this week. Let's see how China gets on. Let's take a look at Japan. So here's the Nikkei in Japan. Look straight away at that 52-week moving average. For the last 2 years, it's been pretty flat. In fact, the price where we were 2 years ago and the price where we are now on the 52-week moving average is exactly the same. We haven't gone anywhere. However, there has been some movement, and let's have a look at what's happened since this summer. So in the summer, we ran down there in July. We bounced off that 52-week moving average. You can see that in July, we bounced off the 52-week moving average that is starting to rise. The market for the last couple of months has slowly crept higher. It's got a heavy resistance level there back from January and February of 24,000. But it looks as though the Nikkei is slowly grinding higher. It's trying to test this level of 24,000. Will it experience rejection there? We don't know. Will it break through there? We don't know. That's what remains to be seen. At the moment, the lines have crossed. The trend is up. It's heading to test that 24,000 level. We've got a rising 52-week moving average, and we've got an RSI that is above the 50, which is a bullish bias. So very, very interesting to watch this particular trend and see whether this one can continue. So that's the Asia region. Let's go across now and look at Europe. So as we begin our look at Europe, let's look at the 52-week moving average, but let's look at what has happened since the summer. Well, if we look back in May, beginning of June, we hit that level there of 6,400. We've got that falling 52-week moving average. There we are, end of May, beginning of June, we got the highest level that we could get to. The market got to 6,500, and what happened? Price rejection. The market has been in a downtrend, slowly drifting lower all the way since the beginning of June until now. But what's happened in the last couple of weeks? Well, the market, the FTSE 100, has moved into a very tight trading range. If we look there, from August, we can see that the market is trading between 5,800 and 6,000. Just a 200-point trading range. And it stayed within that range on a closing weekly basis, which is key, for the last couple of months. Last couple of months, that's all we've done. 58, 6,000, 58, 6,000, 58, 6,000. And we've stayed within that range. Look at the RSI. The RSI has still got that bearish bias. It's below the 50 there. Hasn't been able to get above the 50. 52-week moving average is falling. FTSE 100 has got a bearish bias. And there's nothing really special going on there at the moment. Let's have a look at France. So here's the French market, the CAC 40 in France. Again, we've got that falling 52-week moving average. The market tried again to run up to it. It got to the falling 52-week moving average. It hit it at the end of May, beginning of June at 5,200. What happened? Price rejection, and the market sold back. Again, July, hit it again. That falling 52-week moving average got to 5,100, hit that falling 52-week moving average area. Market fell back, price rejection, fell all the way back to 4,800. And we had another go at it in France. August, got to around 50.50 on the French CAC 40. What happened in August? Price rejection. Market fell all the way back in September to 4,700. Where are we now though? Well, in the last couple of weeks, the market tried to move again to retest this falling 52-week moving average, where there's been a lot of resistance, a lot of pent-up sellers. Every time we get to that 52-week moving average, the sellers come out of the woodwork. Look at the RSI. The RSI is flat, not getting above that 50 level. So we've got a bearish bias. We've got a falling 52-week moving average, And every time the French market gets up to that 52-week moving average, what happens? It gets sold off. So we're in a very tight range here now. And when we look at where the French market is, between 4,700, 5,100, the market is in a trading range. So that's the French market. Let's move across and look at the DAX in Germany. So the DAX in Germany, the biggest economy in Europe. What's happened on the German DAX? Well, again, let's take a look at this one just since the summer months. As we moved up there in May, we ran up, pulled back, nice little bounce off the rising 52-week moving average, went to the next swing high at 13,250. Then we fell back. Then we put another high in end of August, and we went up to 13,500. But what happened after that move? A couple of weeks later, we got that price rejection, and the market drops all the way back to 12,300. And what has the German DAX been doing? Well, like most of Europe, it's in a trading range. If we look there, we're trading between 12,300 and about 13,300. So a 1,000-point trading range. But in the last 3 or maybe 4 months, that's all the German DAX has done. It hasn't really moved significantly higher or lower for that fact. It stayed in that trading range. And that's what happens when a market has indecision. Look at the 52-week moving average though. It does have that bullish bias because it is rising. We look at the RSI, again, a bullish bias because it's above the 50. However, the market itself isn't making any major moves. It's not taking out and making higher highs. We're just staying in that wide trading range between 12,300 and 13,300. Let's watch and see what the next few weeks brings on the German DAX. So let's look at the IBEX in Spain. Again, look at this one here from the summer. What's been happening? Well, we've got that falling 52-week moving average. Look there, end of May, beginning of June. We ran up to test that level. The most we could do was get to 8,000. We bounced off 8,000 that week, experienced price rejection, only for the market to close down at 7,100 that week. Then what's happened? Since May and June, the market has just drifted lower month after month after month. Situation now, well, last 2 weeks, market tried to move to the upside, got a little bounce off 6,600 level, and we got to the 7,000 level. And then this last week, the market dropped back again, couldn't quite hold on to those gains. So again, we're still drifting lower on the Spanish IBEX. We've got that falling 52-week moving average. We look at the RSI. It's got a bearish bias, and it has been bearish for the entire year. Market at the moment doesn't have the legs, doesn't have the steam to even get up to that falling 52-week moving average, let alone close above it. Let's look at the FTSE Movespa in Italy. So here's the FTSE Movespa. Again, look at this one since summertime. It's been quite congested, this one. Ran up to that falling 52-week moving average again, May, June, that same time period. Then we had this big move where the market really went for it in July. It got all the way to 21,000. But what happened? Price rejection. Market fell back, closed below that 52-week moving average at 20,000. That level is key because look at what happened in May, 20,000, price rejection. July, we went all the way up to 21,000. Couldn't close there for the week, closed back at 20,000, price rejection. Then again in August, touched that level of 20,000, price rejection. September, got to 20,000, the falling 52-week moving average. What happened? Price rejection. So this market has been in a trading range of between 18,500 and 20,500. So it's a 2,000 point trading range, but it's pretty flat. When we look at the market itself, look at that 52-week moving average, it is slightly falling. So the 52-week moving average is flattening out, but it's falling. And the market is doing exactly that, slowly drifting that little bit lower as we go through the months. Look at the RSI. Well, the RSI is pretty flat, this one. It's running right there at the 50, but it just cannot break and stay with any momentum above that 50 on the RSI. So it still has an overall bearish bias. Let's go over and look at the USA, because this is where our perfect storm could come from. Just before we take a look at these markets, if you've been really enjoying what we're going through today, don't forget to subscribe. We really do appreciate those who have subscribed already, those who are giving us your support. Thank you very much for that. If you haven't subscribed, just go ahead, it takes 2 seconds, just hit that subscribe button, and also give us that thumbs up if you're enjoying this content. I'm sharing with you 20 years of trading experience. You don't hear me asking you to come and take my course or anything. I'm not trying to sell you a course. I'm giving you free information to help you with your trading. Also share this with your friends, because you may have those who want to do trend following and they just want to know exactly how it's done. So share it with your friends too. So let's take a look at the American markets. Is it a perfect storm brewing in America? So globally, we've got rising COVID cases. In America, they've got an election coming in a couple of weeks. Also, election, rising COVID, and earnings season. These 3 things. Has that created the perfect storm? Well, let's look at what the charts are showing us. Let's have a look at this one from the summertime. Market ran up in the summer and we hit that high in August of 29,000 on the Dow. We've got a rising 52-week moving average. Market drops back from that 29,000 level, it experiences price rejection, and we have a 4-week sell-off where the market drops back to that rising 52-week moving average. We put in a low testing pin bar there, and since then, in the last couple of weeks, the market has run back up. However, where has the market stopped? This week, key, what was the high for the week? The high for the week, again, was that 29,000 level. When we got to 29,000, what happened? The market experienced price rejection. We are at an absolutely pivotal level for the American markets. Either the markets are going to go through 29,000 like a hot knife through butter, or we're going to experience price rejection. 29,000 is going to be a double top and the market is going to reverse. The perfect storm with these 3 things could have been created. Let's look at the S&P 500. So here's the S&P 500. There we've got that rising 52-week moving average. Look at the situation here. The market ran up again in August. And look what happened at that 35.50 level. 35.50, we ran up there and we had price rejection. Market fell back for the next 3 weeks. Then we had that low testing pin bar in September that started the week at 3,300. Market has run up for the last 3 weeks, and then this last week, what happened? Again, what was the high of the week? 35.50. We've been to that level before. We were there in August, and what happened? Price rejection. So let's look at this perfect storm situation. We've got COVID cases rising around the world. We've got an election causing uncertainty. We've got earnings season in the USA. These three things are causing major indecision. We've got, look at where the S&P closed. It was a volatile week, closing right in the middle of the week. Very, very volatile week. Could this be the perfect storm? We just do not know what's happening. The market hates indecision, and that is what we have at the moment. If the market goes up, goes through like a hot knife through butter, then we can move higher, no problem. If the market fails here, we've got a double top, the market would correct to the downside. Very, very exciting time where we are at the moment. Next few weeks will be absolutely explosive for these markets, one way or the other. Let's move over to the Nasdaq. What have we got on the Nasdaq? Well, look at the Nasdaq, exactly the same situation. Rising 52-week moving average. The Nasdaq has been an absolute picture of bullishness. Rising 52-week moving average. Look at the RSI, we've got a rounding bottom there. But the key is we've been to this level before in August, and we had price rejection from that 12,000 level. Got to 12,000, experienced price rejection during the week, and for the next couple of weeks we closed lower. This week we got to just below 12,000, and we experienced what? Price rejection. This is a key level. We must, the Nasdaq absolutely must break through this 12,000 level and close on a weekly basis higher. Otherwise, there could be a problem. The perfect storm is in place, the COVID, the election, and earnings season, and we could see some heavy selling, or we could see a big move to the upside. At the moment, rising 52-week moving average looking bullish. RSI looking bullish, but this potential double top is something to be aware of, unless the market can explosively move with all of the things it has to consider: earnings, the election, and rising COVID. If it moves higher, then we're going to see some big things. But with these three things and the uncertainty that COVID, the election, and earnings season's bringing, what's going to happen on this market? Now, I know I've talked about things that you might not be familiar with: the double top, 52-week moving average, RSI, rounding bottom. How do you know where to go in, where to come out, where to put your stops, those type of things? Well, I'm going to put a strategy video up for you. You can watch that strategy video and it will explain the rules of this trend following strategy. Also, you might be more interested in trading stocks or momentum trading. The other video I'm going to put there is the latest momentum strategy, momentum trading video. Click that one, have a watch of that, and that will help you to appreciate. Then week after week, as you hear me explain things to you, it will all make sense as we put this jigsaw puzzle of the markets together. Thanks very much for watching. Thanks very much for subscribing. Take care until next week.